Hello and welcome back to another video within the mentorship section of the Discord. So in today's video we're going to be looking at my entry model. With this entry model I tend to find my trades have up to a 90% success rate. So the success rate when you take a trade like this is going to be a lot higher than if you take a trade without it. So I do recommend when you're looking at pairs to make sure that you've had this kind of sweep beforehand before entering the trade. Because what I've actually noticed is when I don't wait for this, price always burns me and humbles me and takes me out before the run on what I was looking for anyway. This is simply how I'm getting a 60 to 80% success rate currently using this particular entry model on the 5 minute and the 15 minute. Even works on the 1 minute, but I don't think if you're trading Forex you should be on the 1 minute. I think there's just too many candles to look at for entry points. So I think stick to the 5 minute, the 3 minute and the 15 minute and you'll be looking very nice for a high success rate within the market. So with the entry model, there's a lot of terms for it. It can be called an FU candle, which basically means that it stops people out beforehand, or it can be just known as the liquidity sweep before entry. So this is what I'd be looking for on this gold. So obviously we've had DXY come into our monthly fair value gap, right? So we're looking that we've taken buy side liquidity on gold and any other USD cross pairs. So now that we understand this, we can start to zoom into price and we can start to begin seeing that order flow has currently started to change within these candles. So looking at our entry model, you simply want to get your trend line tool on and you simply want to wait for something like this. So if we zoom right into these candles, what do we see price? What does price do? Price goes through, takes liquidity above this candle, and then what I then wait for is the break of structure, which confirms that we can then look for an entry anywhere within this price range. So usually I like to just take 50%, but if you want a better entry you can look further above for a certain candle in mind. So if I write on here, we've got our bearish break of structure, just so it's nice and clear on the chart. What can we then wait for? We can then wait for another place that could potentially have that happen to it again. This is similar to inducement. Well, it is inducement, but I just like waiting for it on the 5 minute and 15 minute. So as you can see, this would have been entry. After we got this liquidity sweep, we then saw price. You probably could have put it above this wick here, so a nice 10 pip stop on gold, which is great. And then what does price do? We can then look for clear sell side liquidity targets, which is our first one down here. And obviously we have a long way for price to run. So what I'd be looking for a target on this is simply just going from your high to low, and then simply just looking for back into a discount region to where then we can start looking for buys again perhaps, or if price comes and wants these lows. But that would be my target for this trade. So you're looking at a nice 11 risk to reward trade. If you only want to take it lower, you can just take a nice 3-hour trade and get out of the market, be done for the day. 3% is still great. So let's have a look at Euro USD and see what we can see on this. So again, what have I done? I've marked on our 50%. So this is where I know price will definitely, or if not most of the time, will run into before actually continuing the trend or breaking trend structure. So knowing that this was our target, we can remove it and then we can zoom into the price action beforehand. So if we zoom right in, we can see we've had buy side taken with this wick here. We've then had break of structure across here. We've then had another tap into this zone. And what has price taken? Price taken liquidity sweep across. These wouldn't have been my entries. This isn't enough confirmation for me. What I then waited for was the break of structure of these levels. So then we had the break of structure within here. So if we mark that on our chart and put bearish break of structure, as you can see, this was the last sweep before my entry. I watched this happen and I was like, this is absolutely perfect. So we saw another one which confirms our bias even more. So this was another bearish break of structure, and from that point we can understand the price will most likely take out the inducement within here, and that was my entry. Stops could have been a lot smaller than they actually were. I just covered this high just in case, as anything can happen. Wicks can come up here, but likelihood is this was a liquidity sweep in itself. The price shouldn't get back above this, so we could have actually had like a 6 pip stop on this if we were being generous. And then overall targets was the 50%, which would have been around this region here for a nice 9R. I personally, if I had taken this entry with a 6 pip stop, I took it with like a 14 pip stop, I think. But if I'd taken it with a 6 pip stop, I would have just targeted this low, and that would have been me done for the day across them 2 positions. So a nice 4R on this, and then an easy 3R on gold. So other than that, that's my entry model. So you're looking at these sweeps and then the break of structures, the sweep, the break of structure, and then you're getting in. Okay, so don't enter any trades without this. This is super important if you want a high success rate. If you're taking trades without this, the likelihood is most of the time is that you're the entry liquidity. So what I mean by that is, let's zoom into this price. Okay, so zooming in, we can see the nice order flow is to the downside, right? But this is our false high. Why is this our false high? Our false high is because we've had no liquidity sweep beforehand, before the move. So if we'd taken this, there's a guarantee. So let's say we took it off this fair value gap here, right? Across here, and then our stops were just above. What happens? We get stopped out, and then price runs without us. But if we had waited for the sweep of this high, we'd still be in the trade, and we'd still be running great profits all throughout today. So just make sure you wait for the liquidity sweeps beforehand. And other than that, that's basically the entry model. Hopefully that explains it pretty well. I don't think that confused it too much for you, but you can see it happen time and time again, over and over. You will not get a better trading entry model than this. So you're waiting for the liquidity sweep, the break of structure, and then you're entering on the pullback into the 50% region, the short. Okay, other than that, that's the quick entry model breakdown. Hopefully that explains it all. If you've got any questions, drop a message in the Discord, and I'll see you all in the next video.